Tesla stock is unstoppable right now. A lot to discuss in today's video. At the top here, we'll talk about Tesla, okay? We've got to discuss Google. Google stock had a disaster today. Stock absolutely crashed. A horrible day for Google stock. I want to give my opinion on what happened today. Obviously, that was a disaster what happened for Google here today, right? We'll talk about that. I want to share my opinion. Do I think that stock's a buy? Do I think there's better buys in the big tech land, okay? We're going to talk about Uber in this video. Uber stock. They reported earnings, and a lot of people are very excited about those Uber earnings. I want to give my perspective on that one as well as we're going to talk about the markets in today's video and Disney stock also, and if Disney stock's a buy. They came out with earnings, the stock's starting to roar. Big layoffs announced at Disney. We'll discuss that as well. So a lot to get into in today's video. I appreciate everybody that subscribed to the channel. Thanks for being here, guys. Thanks for always enjoying the channel. And also, just so you know, we got our once a year huge Valentine's Day sale coming for Becoming Master Stock Market and Dividend Investing Mastery course. If you want that deal when it comes out on Valentine's Day, check out the pinned comment down there, enter your info, and we'll send it over as soon as that deal drops. And for those of you that will take advantage of that, start with the fundamentals of stock market investing section first. Before you go through that, it's going to go through cash flow, income statement, balance sheet, PE ratios, all those sorts of things. And from there, then you can start working your way down the entire Becoming Master Stock Market course, which goes obviously very, very in depth. This is a phenomenal course for anybody in their first 3 years of investing. It is a phenomenal opportunity for you. Bonus parts goes through how I value growth stocks, several lessons on that, how to outperform the market, right? How to find the next high growth stock, the key to my investing process, like valuation studies, all those sorts of things, and then dividend investing mastery for those that are interested in dividend stocks. Alrighty, guys, let's get into this. So first off, Tesla's rolling, okay? The stock is now, just this year, is up almost 90%. Yeah, we're in the second month of the year. The second month of the year, and the stock is rolling almost 90%. And the amazing thing is, it doesn't matter what happens with the market right now. Market goes down, Tesla goes up. Market goes up, Tesla goes up. It's playing its own game now at this point in time. You look at a day like today, right? Dow was down 200 plus points. The S&P 500 was down over 1%. The Russell was down 1.5%. And the NASDAQ, which matters the most, obviously, for Tesla, was down almost 1.7%. And despite all that red today, Red Dead Redemption out there, their good old Tesla is just putting up another 2% plus day. It's absolutely incredible. Check this out. This is mind-blowing, okay? This goes to show you Tesla against the S&P 500 over the past 5 years, okay? And, I mean, obviously, the chart is pretty self-explanatory. So for anybody that knows anything about stocks, right? Tesla over the past 5 years, 872% return versus 57% for the S&P 500. I mean, that's just nasty. And, definitely my life was changed by Tesla stock. It took me from a person that was doing well for himself to obviously the 1% or maybe even, a little above that, right? Incredible game-changing stock for me and maybe some of you guys that are watching this video, right? And you got to understand, though, over this past 5 years, I understand, over this time, it looks like, oh, wow, Tesla just absolutely tore it up, right? But you got to understand, there were certain time periods over this past 5 years where Tesla underperformed the S&P 500 for certain time periods inside that 5 years, where the S&P 500 was actually either going up and Tesla stock was going down, or there were time periods where the S&P 500 was going up and Tesla wasn't even going up as much as the S&P 500 during the past 5 years. So overall, over the 5 years, it's wrecked the S&P 500. But you got to understand, Tesla stock does its own thing, and sometimes it's going to way underperform the market, way underperform. And I went, as somebody that started investing in the stock kind of in the 2018, 2019, I went through some of those time periods where Tesla stock was getting wrecked by the S&P 500, and I was like, geez, taking a big risk with this stock, right? Because that was a much riskier day back then, and yet the stock's not even keeping up with the S&P 500. What's going on? We're underperforming, right? But you go ahead and you back it up a little bit and you look over the last 5 years and it's oh yeah, okay. Now, something I want to say, right? Because Tesla's my second best performing stock in terms of percentage gain, right? In the public count. The only thing that beats it is ELF stock, right? Which goes to show you that sometimes your best returns they don't have to come from the most complicated companies. The bottom line is ELF has outperformed Tesla for me, right? But a lot of people are looking at the stock, right? And they're thinking the next 5 years is going to be just like the last 5 years, right? And you're going to be able to get another 700, 800% return. I'm not counting on that at all for Tesla. You got to understand, this last 5 years was really, we went from a stock in a company that was very dangerous, and a lot of people looked at it was uninvestable. When I first started investing in this company, right, Tesla, A lot of people looked at this company as they're a potential bankruptcy candidate. They're never going to make money. Their margins are always going to be horrible. They weren't even sure about EVs and if EVs were really the future, right? And so in today's Tesla, if you're buying Tesla today, I think you should still expect great returns over this next 5 years. But with that being said, don't expect these sorts of returns, but you're also taking much less risk than back when I was first buying this stock. I was taking a very big risk, and so weren't a lot of people, right, that were buying the stock back then. The risk is not nearly what the risk was back in those days, right? I mean, just this company's balance sheet, they're loaded with, a fortune of cash. Let's call it a fortune of cash on their balance sheet now at this point in time. They're solidly profitable. Their margins are the best by a mile out there. Their operating income's amazing. So this company's in a way different place, and it's way less risk than if you were investing in this company back 5 years ago. I can tell you that. Just don't expect these sorts of returns over the next 5 years. I think it can do great. I think the stock can outperform the S&P 500. But with that being said, it's not actually the stock I have the biggest return potential. Back 4 or 5 years ago when I was investing in this company, this was a stock I was looking at, and I was like, this probably has the best risk reward in my in my portfolio, right? I can tell you as of today, it does not. It does not. It has way less risk than it once did. But there's definitely stocks I think are going to absolutely decimate that company, right, in terms of returns over this next 5 years. Now, with that being said, Uber. Let's get into Uber stock, and then we'll talk about the Google disaster, and we'll get into a few other things, Disney and other things in this video, okay? So first off, in regards to Uber, I think it's important to understand where this company's been since they went IPO. This is an underperforming stock, and not just a little bit, but by a significant number. You look at this company since they went public, the stock price is down 11%. The S&P 500 since this company went public is up 42%, almost 43%. So the bottom line is Uber stock has been a money-losing stock. If you've traded it well and you bought it, in low prices and been able to sell at high prices, then you've probably done pretty well. But the bottom line is, it's just as an investment overall, Uber hasn't been that stock, right? But I do believe there's certain things going for this company that are going to be a little better, okay? Now, the first thing up here is looking at their earnings, right? Revenue came in and they beat by a little over $100 million as far as revenue goes. That's good. Now, earnings per share is really exciting, right? They had 29-cent profit versus an 18-cent loss was expected, okay? Now, I did a little digging on this, okay? And because I even saw that and I was like, what? 29-cent profit versus 18-cent loss was expected? I did a little digging here. And from what I see, a huge portion of that gain essentially came from basically equity gains for the company overall, which, in my opinion, shouldn't be that way, but that is the way accounting standards are now on a GAAP basis, and it's been like that for years, right? And so basically, if your equity investments go up a bunch, it looks like your bottom line was helped out in a significant way, right? And so from what I see, that's what the situation looks like for Uber. And so don't get too excited about seeing that huge beat. It's not as good as it looks. Let's just put it that way. It's not as good as it looks. It's a step in the right direction, but it's not like they're quite to that stage yet. Okay. It was funny. As I was literally looking up Uber stock, I got a message from Uber Eats. I'm like, seriously, do you guys know I'm looking at Uber stock right now? Like literally on my phone, it goes and it does this little vibration thing, right? And I'm like, seriously, man, that's just absolutely crazy, right? Now, in regards to Uber, it is a very interesting time period to be actually investing in Uber, and I think it's actually a very attractive time. The bottom line is Uber still has very nice growth in terms of their revenue, okay? But this company's about to flip to profitability. They're going to get really dang close this year, and maybe even they start having some profitable quarters. And I can tell you, usually when you're in a company that does that, you're usually going to get from what I've seen over time, you get a pretty significant move in the stock price as you go from this is a money-losing company, right, to that profitability, because you just open your investing world up in a massive, massive way. A lot of people won't consider a company if it's losing money, and especially if it's losing a ton of money like Uber has historically. Basically, look at how much Uber's losses have been since that company went public. It's significant, right? And so that's just going to, once this company starts hitting consistent profitability, it's going to open up to a massive new amount of investment funds and folks that are looking to actually invest in Uber. It also opens up once they become solidly profitable, that opens up the potential for this company to get in the S&P 500 and other indexes. So these are things to consider. And so this is why Uber is likely positioned to have a very, very nice next 2 or 3 years as far as the stock price goes. Not a stock I personally own, but I would not be surprised at all if Uber stock doubles or triples over this next 3 year span, in my opinion, okay? I mean, it's going to be a very, very attractive time for that stock price overall, okay? Google. So obviously complete disaster for Google stock here today, down 7+%, 7.5%. For Google, that's a huge move. Any of these massive companies, a Google, a Microsoft, an Apple, any of these sorts of giants, for them to make a 7% plus move and not even on earnings, that's a disaster, okay? So what the heck happened here with Google, right? Well, first off, by the way, I'm invested in Google. It's a smaller position for me. I have $25,000 invested in the public account. So, a lot of my gains went bye-bye here today, right? And I'll talk about if I view this as a buying opportunity or not, right? But this is a good way of putting it. $120 billion was wiped off Google after their Bard AI chatbot gives the wrong answer. Oh boy, okay. So in an animated GIF showing how Bard works, a user types in search query, what new discoveries from the James Webb Space Telescope can I tell my 9-year-old about? The NASA telescope was made operational in 2021 and has been used by scientists to make several discoveries of new planets outside the solar system. One of the responses generated by Bard says that telescope took the very first pictures of a planet outside of our own solar system. This is not accurate. The first picture ever taken of a planet outside of the solar system was basically captured in 2004 by a very large telescope in Chile, essentially. Okay, so that's about as bad as it could have been. Like when you're showing off this technology, the last thing you want is it to give you an inaccurate result. So that's not good. That's very, very bad situation, right? Now, did this stock deserve to lose $120 billion of market cap today? Probably not. Okay, probably not. That's probably way overdoing it. I could understand it, the market cap being down 30 billion or something like that, right? It's like kind of like a PR nightmare to have something like this happen with your new technology. It's very disappointing, but yeah, $120 billion, it might be a little much for this mistake nonetheless, right? No, my view on Google, okay, is I do view it as a buy, but what I actually view as a bit better buy right now is actually Amazon. I do believe Amazon's going to significantly outperform Google over this next 3 to 5 years, significantly, okay? Amazon is in a situation where their net income is going to absolutely explode over this next few years, okay, for many different reasons I went into very in-depth on a video a few days ago on the channel, right? And I talked very in-depth about that. So Amazon's going to have their net income explode over this next few years. Google, I think they could have some sort of move up in net income, but I don't think it's going to be very exciting from the net income side for Google over this next few years. But the main concern I have with Google, and why I'm probably just going to keep this a small investment, and while I'll probably build Amazon into a much bigger position than Google, is the government's after Google in a few different ways right now. And obviously Google's search is so dominant that a lot of people are very concerned about that from the government side. So they're looking in there. And plus Google has obviously not just competition from the AI side, but they also have competition on the YouTube side from obviously TikTok and Instagram Reels, which zaps attention away from YouTube. So Google's facing a lot of problems. And these problems aren't going away. It's not like all these problems are fixed next month or next week. And as somebody that's been invested in Meta stock, right, over the years, I've seen like what a drag it can be for a stock to specifically go through anything like major government entities, let's call it, looking into the business and viewing you from all these different angles, right? Potentially giving you fines if that happens. It's a huge, huge cloud over the stock. And I think Google's going to have to go through that over the next few years. And so I think Google can produce decent returns over this next, few years, but I just don't think it's as appealing as the forward PE would lead it on, right? Google has an amazing business model. They have an amazing balance sheet, amazing income statement, but I actually think the returns for the stock price could actually be somewhat muted over this next few years. As an investor of stock, maybe I'm wrong, and I hope I'm wrong, because that would just mean my shares appreciate a lot, but it's just I feel like there's better opportunities in this market than Google right now, which is why I'm going to keep that a smaller investment of mine. I'm going to stay invested in it. I like the diversity it gives for me, but I do believe like a stock like Amazon is going to significantly outperform the stock over the next few years. We'll see how it all plays out, obviously, okay? Next up, Disney. So Disney. So first off, the stock's moving up after hours. I knew this was going to happen. And the reason I knew this was going to happen is Bob Iger is back at the company, okay? And like I was just thinking about this, right? This is his first conference call, and he's going to pull some rabbits out of the hat. It's Bob Iger. He's been CEO of this company. I'll show you how much Bob Iger's Disney outperformed the S&P 500 when he used to be CEO of this company. He just returned as CEO a few months ago. And you're going to be amazed when you see that chart. That's shocking, okay? So this man's a very good CEO. I knew he was going to pull some rabbits out of the hat on the conference call and, have a new vision for where Disney's going, right? And I know investors are going to get very, very excited about this new future for Disney under Bob Iger. And sure enough, he's starting to pull rabbits out of the hat left and right, okay? First one is Disney's going to reorganize into 3 divisions and slash 7,000 jobs. Disney said it's reorganizing into 3 divisions. Entertainment division, okay, which I would think of that as like movies, Disney Plus, shows, all those sorts of things, okay? Then they're going to have obviously their sports division, which is ESPN for all the sports fans out there, right? Then they're going to have parks and experiences, which is obviously Disneyland, Disney World, all their different parks around the world, right? And so that's going to be their 3 divisions, right? They're going to slash 7,000 jobs from its workforce, and they're going to cut $5.5 billion in costs. That's significant, okay? So as I expected, Bob Iger pulled some rabbits out of his hat in this whole situation. That's some major stuff there, right? Now also, he's going to also go on CNBC tomorrow as well. He's going to be on Squawk on the Street, and he's going to really try to change the narrative around Disney. And from my understanding, Nelson Peltz is trying to get on the board. I don't know for sure, but I don't think Bob Iger wants him on the board of directors. And so the bottom line is Bob Iger is really going out there and really going to preach about why Disney is going to be, a great company over this next few years and a much more well-run company than it's been, let's call it, over the past few years under Bob Chapek, okay? Now, check this out. This is shocking, okay? This is Bob Iger, previous 15 years as CEO, okay? The stock was up well over 450%, okay, under his previous 15 years as CEO. This versus S&P 500 was up about 150% over that same time. So this man epically outperformed the stock market when he was the CEO of Disney, okay? And so this is one of those things you look at as a shareholder, and if you're interested in Disney, and this man has a track record, right? Which it pays to usually bet on people that have a good track record behind them because they usually do very, very well for their companies, right? And so Bob Iger has a great track record, and I think he's going to build a lot of shareholder momentum. And is it impossible for me to imagine within 2 years it's a $200 stock again? I don't think so. I don't think it's out of the realm of possibility at all. If they're going to bring back the dividend, they're going to increase profitability in a massive way, and they're going to likely show a clear vision to where Disney's going over this next 5 years, which a lot of people have had trouble getting a vision of where Disney's going over the past few years. And I think he's going to be able to lay that out. Here's our business segments. Here's how these are going to perform. Here's why they're going to perform a lot better over these next few years. And like I said, I wouldn't be surprised if that's a $200 stock in a few years. I don't own it personally in terms of the actual stock, but I wouldn't be surprised at all. I'll just put it like that because this man, he has a track record of doing phenomenal at this company, okay? Now, let's talk about the markets for a moment, okay? The markets have obviously pulled back, right? Over the past few trading days, the Nasdaq's down about 2.5%, 2.5 to 3% over the past few trading days, right? And the way I look at this is this is the ideal situation for bulls. Actually, we had a kind of a very exciting move up there. You need a slight move down and kind of consolidation. These 2 to 4% downward moves are actually the best thing if you're going back into a bull market. We're not seeing any signs whatsoever right now of any mass sell-off of stocks, which shows you no one's really, in terms of people that wanted to really get out of this market and sell positions, it's clear as day those folks did it back in the summertime and the fall time. And you're just not seeing any major selling pressure whatsoever right now. And so a move like this to move down and kind of chill a bit is honestly the best thing for bulls that you could possibly see if you want to, the last thing you really want to see is the market just kind of keep rallying like insane because maybe that's more like this is performing more like a bull market now versus a bear market. A bear market is just kind of like straight up and then you get this vicious, just straight down move. When you're back into a bull market, you get an insane move up and then you get a slight move down, kind of chill for a bit, everything kind of consolidates, and then you get the next big move up, right? And so it's performing more, the market's performing a little bit more like a bull market now than a bear market. So hope you guys enjoyed today's video. As always, I appreciate every single person that subscribed to the channel. Thanks for being here, and make sure you take advantage of our massive epic once-a-year sale that's coming up for Become Master Stock Market and Dividend Investing Mastery. There will be pinned comment down there to go ahead and receive that deal as soon as it drops on Valentine's Day. Much love and have a great day.